Hi traders, welcome to another episode on the trades we missed last week. So this trade was on 25th of August 2025. As you can see, there's a fair value gap here. You can see this fair value gap. Price taps into this fair value gap and gives us a break of market structure here. As you can see, after this break of market structure, we would anticipate that price would move over to tap into a newly formed fair value gap at this spot. As you can see, there's a fair value gap here that needs to be filled up. Now, coming back to fill it up is our entry. So this is how we would have taken our first trade for Monday. So a short position, just like so, at this fair value gap, and we'll put our stop loss at this one here. So this is where we put our stop loss at this high here. So we have our take profit at this low right here. We can use this one for our take profits, also use this one for our take profits. Using this overall take profit would have given us a 5.55 risk to reward ratio. As you can see, like so, boom, we have a TP hit. We have a TP hit right here. So the next trade is just around the corner, because as price taps into that fair value gap here, it also created a newly formed fair value gap right here. So this would be a break of market structure, and after this break of market structure, we can use this fair value gap as our entry. So this is how we would have our next trade. So this is a continuation trade, because this continues that first trade. We'll use this high as our stop loss, and we're going to use this fair value gap as our entry, just like so. And the next one is our take profits. We'll just use this one as our take profits, same take profit, but this one would give us 3.16 risk to reward ratio, because we have a higher risk, we have a higher stop loss here. So the next trade we have would be a trade from Tuesday. So this was our second trade for the week. Now we have this one as a fair value gap coming from this spot here. This is a fair value gap that needs to be filled. Now price comes back up to tap into that fair value gap. Next thing we need to look for is a break of market structure. Just like before, we have a break of market structure. So all we need to do is just to wait. We need that patience in trading to wait all the way. So market taps into this fair value gap, and this is what we would have used as our entry for a short position here. So we'll put our entry here at that fair value gap, and we'll put our stop loss at the start of that high. So this high would have given us our stop loss. So this is where our stop loss will be, and our entry at this fair value gap. Then the next one is our take profit. Our take profit can be this immediate low at this spot, giving us a 4.07 risk to reward ratio. So as you can see, it hit our take profits just like so for our second trade for the week on Tuesday. So the next trade will be our trade number 3, and as you can see, we have a tap into this fair value gap. This is a fair value gap here. We just need to align this fair value gap, having to because we need to align this fair value gap just to anticipate that price can just move all the way to this side. So anyway, it might be that it would hit this spot in later time, probably the next day. So but you just have to alight your fair value gap all the way to the right. So the next thing after you tap into that fair value gap is to find a break of market structure and the newly formed fair value gap, just like so. We have a break of market structure here. The next thing is to look for a fair value gap. Do we have a fair value gap? Yes, we do have a newly formed fair value gap here, like so. We have a fair value gap here. Next is our entry. So we are going to use that fair value gap as our entry. Short position here, we are going to use this one. So we are going to use this high as our stop loss, and this would indicate that our take profit would be at this low right here, giving us a 3.65 risk to reward ratio for this trade. So that was also a bearish trade. As you can see, boom, it hits our TP. So the next trade is our trade number 4, and our trade number 4, as usual, would have to use a fair value gap at first. We have a fair value gap that's priced at once hit, and next thing is break of market structure right here. Now we have a break of market structure, and prior to that is a fair value gap. So this whole fair value gap would be our entry. You can also see for a higher chance, or for you to have a higher risk to reward ratio, you can just redefine it to the candle or your order block right there. So you can see the price actually use the order block for retracement, as you can see. So this would have been our entry for this is our trade number 4. So we'll put our short position like so at this start here, and our take profits would be down below, but our stop loss would just be using this previous high for it. So this would have been our stop loss right here, and our take profits is here using this previous low, and this is giving us a 1.83 risk to reward ratio. And you can also use the take profits from a previous trade using this previous low right here. So this can serve as our take profits. So let's see how it goes. So we stretch our TP to this point, and this is giving us a 5.37 risk to reward ratio for our trade number 4. Next in line is our trade number 5. As you can see, this is a fair value gap right here, and this fair value gap, as price taps into this fair value gap, it created for us a break of market structure, just like so, and also close below it and giving us a fair value gap right here. So as you can see right here, we have an entry for our trade number 5. So this is how our short position will be. So we have had many bearish trade. So this is where our entry will be at this spot, and our stop loss would be at this previous high right here. So our take profit can either be this one here, this previous low, giving us a 3.1 risk to reward ratio. Next in line is our trade number 6. Now let's see our trade number 6 here. So we have our trade number 6. As price goes bullish, we have a bearish fair value gap here. So price taps into this fair value gap, fills it up, and comes down to give us another fair value gap right here, and also a break of market structure. As you can see, price breaks below this previous low right here, and you can see a fair value gap for our entry. So this is where we put our entry, just like so. Our short position is here. So our stop loss would be at this high that created for us that fair value gap. So our take profit can either be here, giving us a 1.97 risk to reward ratio at this previous low here. You can also take your TP to another level. You can see how your TP can go all the way to this previous low right here. And this is giving us a 5.66 risk to reward ratio for our trade number 6. So our trade number 7 is also a bearish trade. So we have a fair value gap that's price had respected all through all the way to our right here, and you can see how the price pierced through to take out all this high, all this liquidity, and comes down to give us a fair value gap and also break off the market structure right here. Market breaks below this low, and the next thing is our fair value gap right here. This fair value gap is our entry. You can also use this order block right here. This order block can be used as our entry. So this is how we would use short position, just like so. And our stop loss would be above this high right here, and our take profits would be at a previous low. So we can use this for our take profit. This is our take profit here. So you can see the market is actually giving us a 2.05 risk to reward ratio for our take profits. And that was our trade number 7. Now moving on to our trade number 8, you can see a fair value gap being tapped into. See this one, fair value gap being tapped into. The next thing is a break of market structure. As usual, we have a break of market structure here. We also have a confirmation break of market structure here. So moving on, you can see how price once tapped into a fair value gap and has given us a break of market structure. Next thing is to use this fair value gap that is here for our entry, and this is our entry for our trade number 8. Now would use this previous high for our stop loss here, and the next one is using this previous low for our take profit, giving us a 3.61 risk to reward ratio, as you can see here. So that was our trade number 8. You can see that our trade number 8 actually went all the way down to this one and to this low right here, giving you a 16.26 risk to reward ratio if you had waited that long. So moving on, we have our trade number 9. Our trade number 9 is coming from a fair value gap from a high time frame, and this is indicating a demand area. Now price comes back to that demand area and created a fair value gap here, and a break of market structure is being cited right here. This is a break of market structure indicating that when price comes back to tap into this fair value gap, it bounces back up. So now we have a demand area and a fair value gap coupled with a break of market structure. So as price comes back to tap into this area, it bounces back up for our trade number 9. As you can see, this is our first long position just at this spot here, and we'll put our stop loss below that low that created for us that fair value gap, And the next one is our TP, which is our take profit. So we can use our take profit at a high that is suitable for our take profits, that is suitable for us, a high that is actually suitable for us. So this is going to be our take profit right here. So this is giving us a 7.08 risk to reward ratio. So that was our trade number 9. And see how price went all the way up. So this is the last but not the least trade for last week, and this was on Friday. As you can see, this trade is coming from this fair value gap. This is a fair value gap, call it a BC, and you can see how price tapped into this area a couple times. Now created for us a break of market structure here after eating out this liquidity here. You can see how you can see how it takes out this liquidity here and breaks the market structure here. So the next thing is using this fair value gap for our entry. As you can see, the market comes back to tap into this fair value gap, and it uses it to bounce it back to give you a bullish trade. So this is how we put our entry, just at the start of that fair value gap here for our long position, just like so. And we'll have to use this previous low for our stop loss and a high that is suitable for us for our take profit. So you can do it like this. You can either use this high, this is giving us a 2.97 risk to reward ratio, as you can see here, or use this high right here, which is giving us a 3.39 risk to reward ratio. And you can see, boom, we have it here. The price actually hits the TP, giving us that risk to reward ratio. So moving on, we would have to see if price actually wants to respect this demand area and bounce back up, or actually want to respect this fair value gap right here and goes back down for our next week trade. So see you guys on the next episode. This is just a back test on what we passed through last week, and you can use this to also back test more on your trading view. And we'll meet on our next episode on the trades we miss. See you guys, and peace.